Nearly 10 million ounces of gold resources through acquisition. This 50-cent stock has received a $2.65 price target from Cantor Fitzgerald. It's the one must-own precious metal stock according to New York Times bestselling author and fund manager Marin Katusa. Learn more at futuremoneytrends.com/gold 2016. Greetings and thank you for joining us at futuremoneytrends.com. I have a special guest today. I was able to attend a very, very popular show in the investment community this past year, and now I have already told my wife and my kids it's going to be an annual event. It was just a blast. The best speakers, the best people, just a high quality environment of both the speakers and the guests. He is the host of the New Orleans Investment Conference, the CEO of Jefferson Financial, and editor of the Gold Newsletter, probably the oldest newsletter out there for gold investors, a cornerstone really in the gold and precious metal market. And not only covers gold stocks, it covers resource stocks and even tech plays. Brien, thank you so much for being with us.
Great to be with you, Daniel.
Well, hey, Brien, I only have you for about 10 minutes, so I want to get right into this. In the summer and fall, the gold bears were out in full force, saying how rising rates were going to take gold sub 900. You are on record on August 27th saying the opposite, going as far as saying the Fed rate hikes could be a blessing for the gold price. And since that hike, the high-quality gold juniors, they're up solidly. Majors are up 50% plus, and gold is the best performing asset in 2016. So, Brien, what is next for gold as we enter the third month of 2016?
Well, back then, my prediction was based on the fact that there was a thematic long-term short gold trade among all of the big hedge funds and Western speculators. Really, the moment that the Fed had announced QE, unlimited QE3 that had no time duration or degree limitation put on it. So at that point, the big play was, well, the next thing the Fed is going to announce is going to be tightening or tapering and interest rate hikes. So at that point, if you look at the charts, almost literally the day the Fed announced that, gold rapidly declined in price and had been declining ever since. So to me, the fact that the Fed would finally begin its rate hikes would alleviate that, and then the speculators would look at the market, because the gold is being priced by the Western speculators, priced in the paper gold markets, and then sold obviously in the Eastern markets at that perceived discount. So once they announced that there would be Fed hikes, then the perceived next announcement from the Fed, the next big thing would be, well, are they going to stop hiking rates, or are they going in the other direction? And in fact, when they first announced the initial rate hike, the quarter-point rate hike in December, I predicted that the next big speculation was going to be whether they would go, how far down they would go, and if they would go into negative interest rates. So nobody was really talking about it at that point in time. But I thought that was going to be the next big issue, and in fact, that's exactly what turned out to be the next big area of speculation. Will the Fed get into negative interest rates? And I think that's what's really driving the gold market right now.
Yeah, and I mean, when you look at the gold market, it's rallying in every currency, the dollar included now in 2016. Mm-hmm. So, I mean, does it look like the dollar itself has probably topped relative to other currencies, or is this just gold versus all of them?
Well, there is a call on, they talk about the Bernanke put, the fact that the Fed would always come in to rescue the stock market. Well, I think there's a call on the dollar index at 100. There is a unspoken or unwritten contract among the major central bankers of the world that we're not going to let the dollar get above 100, or the dollar index get above 100. Every time that's happened, it's only happened twice over the last couple of years, but in both instances, as soon as it happened, you had Mario Draghi finding a microphone somewhere to talk up the euro, and the dollar's gone right back down. So I think that somebody somewhere will come out and make a statement to halt the dollar's rise above 100. With that said, gold is rising in terms of all currencies, and the only correlation gold has with the dollar index is either short-term or in a weak gold market, which is what we've seen over the last few years. And once it's going up in terms of all currencies, the relevancy to the dollar index is really non-existent, or the correlation to the dollar index is non-existent, because the dollar index is simply a measure of the U.S. dollar against its trade currencies. So once gold starts rising amongst all currencies, once all fiat currencies are suspect in the eyes of investors, then all of that just washes away and is really irrelevant.
Brien, I want our members to really have a chance to profit from this gold bull market. Your newsletter, if they want to subscribe, where is the best place for them to go?
Goldnewsletter.com.
All right,
goldnewsletter.com.
Brien really talks to the insiders. He's the insider's insider, guys. He's been around for a long time. Brien, on gold investments, some analysts out there talk about the high quality producers because they're is essentially they're advanced companies or mid-tier producers. You got the gold optionality plays. You got the gold royalty plays. Do you have a preference right now? I mean, looking at the chart, everybody's down. I mean, we're just barely coming off the bottom here. Is there a preference to what type of gold investments you're making right now?
Yeah, I'm recommending companies that have large, really world-class sized resources, primarily gold and silver, and proven resources that may have some advanced economics on them, where they're really just in the bank, as it were, sitting there. And these companies are trading at multi-year lows, really at the levels that exploration companies were trading at just a few years ago. So you can pick up companies with millions of ounces of proven gold resource in the ground, highly economic at today's prices, for really just a small fraction of what they were trading for a few years ago. And these companies, I believe, as the market turns, will be the first to be snapped up by the majors who need to build resources. The majors have not devoted hardly any money over the past few years toward exploration, so they've not replaced reserves. They have to turn to M&A to replace those reserves and production, and these companies will be the first to go. So not only do they have a large degree of upside profit potential, but the time factor is working in their favor right now. It could really happen at any time for any of these companies.
Yeah, and for anyone to get those picks, just go to Gold Newsletter, subscribe to Brien's email. And right now, believe me, I mean, you look at the chart, now is the time to get into these stocks. Brien, Rick Rule, over the past few months here, a few weeks especially, has been really, really pushing gold optionality. I talked to Marin Katusa earlier this morning, and he was part of the Brazil Resources financing, where insiders, millions of dollars buying shares of these small companies. You have mentioned Brazil Resources in the past, and you're somebody who likes Amir Adnani. Is that a company that is still on your list for stocks these days? Because it's been beaten down.
Absolutely, and and you can tell by the smart money going into that company that it's a popular opinion among the people who are really proven winners in this sector. Yes, it's well managed. It's got millions of ounces in gold and a very good jurisdiction, and it's aggressive. Amir is very aggressive in building that company, and in fact, it also has an exciting uranium exploration play attached to it as well, which is something that kind of happened, I don't want to say accidentally, but unexpectedly. And I'm very bullish on uranium as well.
Yeah, it's interesting about that because the uranium play I know is, I think, I don't know if it was Marin or Rick, somebody had told me recently at a conference that uranium play, if it was spun out, would have a market cap that's probably greater than the market cap of BRI, Brazil Resources. Brien, I want to move on to silver. Silver is slacking here. While gold's sitting here making 52-week highs, silver in 2015 and 2016 it did decouple itself from the rest of the commodities, but it is having trouble keeping up with gold. What's going on with silver?
Well, we're in the early stages of this recovery in precious metals, and the reason why gold is going up is because been a bit of a safe haven play because of the financial turbulence we've seen in markets around the world, but also because it's a monetary play, which is important for this move. Investors are looking at the potential for negative interest rates around the world. Fully a quarter of the world's economies, developed world's economies, are now operating under negative interest rates. So this is a trend that has the potential of spreading to other major economies, including the U.S. And in that type of environment, gold as money outperforms cash significantly. In that if you're being charged rent for your cash in the bank, then the advantage that gold has, or the disadvantage that gold used to have by not earning interest, evaporates. So you might as well put your money into precious metals as opposed to just leaving it in the bank. So in the early stages of a move, silver lags gold because gold is kind of the go-to investment. It's the first choice. But as the move gains maturity and develops, then silver offers exceptional leverage to the move in gold. So I really like silver right now because eventually it will move along with gold in this new run, and it will outperform gold.
Yeah, and my goodness, those silver miners, I'm not going to mention a few of them, but some of those primary silver producers, smaller market caps, man, those suckers moved big time with a very small move in silver.
Right.
Last question, Brien. With the negative interest rates and with oil down to where it's affecting some of these big economies, U.S., Russia, Saudi Arabia, and the central bankers kind of just at an inflection point here in 2016. Is the world moving into some monetary chaos because of what's going on with negative interest rates, or do you think they're going to be able to keep this thing stable for another 5-6 years like they've done since 2008?
Well, that remains to be seen, but it depends on how you define monetary chaos. I would argue that we're already in monetary chaos, that negative interest rates, if they're not a sign of desperation, I really don't know what is.
Yeah.
I think, you look at Europe and a number of other economies, you look at China, you look at Japan, and you're talking about government stimulus efforts that are, in some cases, unprecedented. In Europe and Japan, they certainly are. And you have them going through with quantitative easing at a greater degree than the U.S. ever did, and combined a larger economy than the U.S. So really right now the U.S. is the only economy that's standing strong against the receding tide of monetary policy. And whether the U.S. can withstand that and continue to stand alone with some growth rates at all remains to be seen. And that's the big issue for gold. If the U.S. economy begins to turn down, if it looks like a recession is possible or likely, then you'll see gold take off like a banshee to the upside.
Well, hey, I'm looking forward to that. Some of the highest quality picks, guys, right now at the bottom of this thing. We're barely bouncing. We've barely scratched the surface. Brien Lundin. Google his name. Go to goldnewsletter.com. This is the one guy. I mean, I saw it myself. I was at the New Orleans Investment Conference. I saw Marin Katusa. I saw Rick Rule. I saw many other investors. I saw James Rickards. All of them, chatting with Brien. And Brien is an insider, and you definitely want to subscribe to his newsletter because I think big profits are ahead. And I've seen these gold stocks, when they move, I mean, they go up 10, 20 times. I mean, the silver stocks, silver had an 8% move. They go up 50 to 70%. Plus, you'll get not only his suggestions in the precious metal market, but other suggestions that are completely off the radar. Brien, hey, look forward to talking to you between now and the New Orleans Investment Conference. But hey, I love the show so much. You're stuck with me. I'm going to be there next year too, this year. Hopefully you don't mind.
Good. Looking forward to it.
All right, sir. Have a great day.
All right. Take care. Thanks.